Hi, this is Andrea French, Executive Director for TAG, Transportation Advocacy Group. And today we're hosting our first webinar about the Paycheck Protection Program. And I'm joined with TAG Chairman Mustafa Tameez and our Legislative Policy Council expert, Jeff Collins. Welcome to our first webinar, and we hope to answer any questions that you might have to help your business through relief, recovery, and resilience. Thank you. Jeff?
Next, I want to just mention that we're not lawyers or accountants or bankers, but I do recommend first thing you do is go talk to your bank or your credit union or whoever you do your financing with. But this is a very important program. Thanks for joining us, and tell them all about it, Mustafa.
Thank you, Jeff. Thank you, Andrea. So this is a little different. I know that a lot of people watching right now either have applied already or they have conversations with their bankers or have conversations with their accountants. So we're coming in this a little bit late. But the purpose of this webinar is to try to help you come up with an approach as you talk to bankers and accountants and you get mixed information to give you a framework in how you can deal with this. So with that, I want to start with our slide presentation. The Paycheck Protection Program is the main thing we're going to talk about, but there's also an economic injury disaster loan called EIDL. And the main part about that I think is very valuable is that the EIDL grants, which are about $10,000. These are grants that you can get by applying directly at the SBA's website. What happens is if you applied for the PPP program, the Paycheck Protection Program, that $10,000 you get as a grant is taken off from the portion that is forgiven loan from the PPP program. The other thing is with the EIDL program is that if you're applying for EIDL, then you should develop a strategy in which the Paycheck Protection Program is using funds from it to pay for employees, but the EIDL program could be used for other types of working capital that is non-payroll related. This way, we're not double dipping. At the same time, you're taking advantage of both the programs. But again, we're going to focus on the PPP program. And when I say PPP is Payroll Protection Program, but I want you to also think about it by being positive, being patient, and being persistent. With this program, because it's been created so quickly, it's about $350 billion out of the $2 trillion program. And there were a lot of details to it that just weren't very clear in the beginning, and they're still being worked out. The basics of it is that it is 2.5 times your average annual payroll from last year. So that's what they're trying to get to you with a ceiling of about $10 million. And the biggest issue you get when you're trying to calculate this, which seems fairly simple on the front end, but you get a lot of issues with it. So everything from any employee that has made over $100,000, you can count up to the 100,000, but you can't count anything above it. So when you're calculating your average monthly payroll for last year, you're basically taking a look at what you've paid for the entire year, divide that by 12, and then take out any employee's compensation that's above $100,000 to come up with that number. Does that make sense? So that's the basics of it. There's a lot more information out there. The thing that's somewhat most contentious, if you look at the next slide, that comes up a lot is W-2 wages versus 1099. Within the legislation, there was mention of 1099 wages. As you see things coming out of the SBA, they talk about 1099 wages. And many of us have both W-2 earners as our employees, and we have some people that are 1099s. And that affects our calculation significantly. And so when we're getting mixed messages, whether it's 1099 should be included or not included, there was a controversy. There were multiple news articles that were written about this subject. Some said that you can include the 1099, others that you can't. But as we get into, like today's Tuesday, and people have been applying for this program since Friday, what we've learned is that under no place where you can include the 1099 wages in any way, shape, or form. You can only use the W-2 wages as part of your calculation. The only exception I've seen one bank make is that a particular company had employees that were getting W-2 wages, and on top of that, they were getting an additional bonus or something under 1099. Now, I don't know how the IRS looks at that, but a particular bank allowed that in the calculation. But other than that, I have not seen big banks or a small bank take in consideration anyone who's getting 1099 wages as part of it. So those are two things. Like as you're planning for this, you're going to hear mixed messages, W-2 versus 1099. From our best understanding, you can include 1099 wages, 1099 earnings as part of your calculation for your payroll. So as we go to the next slide, the other thing that I want to make a distinction on is when you look at covered cost, there's two things that are important to understand. So when you're calculating what amount of loan to apply for, you've got those W-2 wages, you're subtracting any portion of the employee's compensation that is above $100,000, right? And then you're adding healthcare costs that you are paying as an employer, and you're also adding 401k costs that you're paying as an employer, your employer contribution. Those things then become the total amount of money that you can, ask for within the program on a monthly basis times 2.5, and that becomes the pool of loan that you apply for. On the other side, when you look at the payback portion in terms of the covered costs, you can, in addition to paying for employee salaries and health care and 401k contribution, you can also pay for rent and utilities using the money. And that's an important distinction because you can use 75% of the money that you receive for payroll purposes and 25% or less on utilities and rent. And that's important because if you want this to be a forgivable loan, then you have to follow that formula. So 75% of the money should be spent on payroll within the 8 weeks of the program, and then 25% can be spent for rent and utilities if you have money left over. Let's go to the next slide from there. There we go. So as I mentioned about the forgiveness elements of it, you have 8 weeks to spend the money that you receive. And within that 8-week period, 2-month period, if you have used the money, at least 75% of it for payroll, and then the 25% on top you can use for rent, as I mentioned, and utilities. If you've done that and you've exhausted that money, 100% of that is forgivable. And the important element that we all should remember is the documentation, is to make sure that you're keeping very clear documentation on what payroll payments that you're making, what checks are you writing for rent, what checks you're writing for utilities. That money has to be kept separate. For some, people are recommending that you open up a separate bank account. But from my vantage point, if you're running a small company, as long as you keep track of these expenditures, as long as you keep your documentation very clear and you're able to produce it, because your bank is going to ask you to produce these things fairly quickly. So if you start that in mind of how I have to keep track of this on a weekly, monthly basis, and I've got to turn this documentation at the bank fairly quickly as soon as my 8-week period are done, that's going to help you in making sure that this entire amount is forgivable. There's a lot of details to this program, but the important thing to know is one, to be patient, right? To be positive about it, because there's mixed information, there's confusion, and so you need to take this as a great opportunity for our businesses. And then to be somewhat persistent, that you always have to kind of check with your bankers and check with your accountants to make sure that you are following the letter of the law, and make sure that there's no misunderstanding that can lead into a fraud investigation. So don't be afraid of it, as long as you're doing all the right things on the front end and you're keeping track of your paperwork. This program can be very, very effective in keeping our businesses strong during this economy. So I'll just stop right there and then ask Jeff and Andrea if they want to chime in if they've got any questions that have come into them.
I've got a few, Mustafa, and thanks you. That's very interesting. I think first question I would have as a business owner would be, this is a program for really employee retainers. The government wants you to keep employees on the payroll. How does that work in relation to this program? If you were looking at not, when the money comes in relation to how long you need to keep them on your payroll at your company.
Yeah. So Jeff, that's a very important question. So you may have employees that you might have furloughed, right? You might have employees that you might have terminated, right? And you might have employees that you're still paying. So you have multiple of those situations that can occur. What the program actually does is that it gives you funds to pay people for 8 weeks. So if you've furloughed them, you can bring them back once you receive the funds, and you have money to keep them there for full 8 weeks. If you've terminated them, you can hire them back, and you've got them for those full 8 weeks. Or if you're continuing to pay them, and now you have additional resources for yourself to pay them, but maybe the resource that you're going to use to pay them can go to safeguarding your business in other ways. So, the long and the short of it, you have 8 weeks to spend that money, and that money should be spent for paying people as first and foremost, and then 25% of it can be used for paying rent and utilities as well.
Okay, in relation to the idle program as it relates to the payroll protection program, are they separate programs? Could you apply for the 10,000 and not apply for the payroll protection, or how does that work?
It's a really good question. So the idle program, you apply first directly through the SBA, not through your bank, right? And there's two parts to it. One, there is a $10,000 grant, which functions like a grant that you get, and you don't have to pay that back. If you're applying for the PPP program, then that $10,000 is taken away from the forgivable part of your PPP loan. If you have an idle loan beyond that point, beyond the $10,000, it can't be for payroll because you're getting funding for PPP. Otherwise, you're double dipping. It can be for other things, other operational costs. There's a whole lot of other things that you may have equipment leases that you need to pay for. So that money can be used for other things. As long as you're not double dipping, you can have both programs work in conjunction.
Okay, my last question.
No, sorry, Jeff.
Oh, I may have one more.
Yes.
One more quick one. Basically, once you apply for the program, do you have a feel for how long it'll take till you hear if you're approved or not?
So that is the $64,000 question, right? There is none of us seem to know exactly what do the timelines look like. When the bill was signed, and the purpose of it was to get money out there very quickly so that we all can keep our staff and our employees in place, and the economy would not have so many people going to the unemployment rolls. The program got signed, it got opened up last Friday. A lot of bumps because there were some things that weren't really clear in terms of how it would be implemented. We had some major banks that changed policy midstream. So there's a lot of confusion with it. I think that we're going to start seeing answers to that in the next coming days. I think that personally, I applied through Bank of America, which was a big bank. I submitted my paper. I applied on Friday morning, and then they gave me an email to submit my paperwork, and it took me like half a day to get my paperwork submitted because I couldn't figure out how to, upload the files onto it. And so that got done today. So now I think that within the coming days and weeks, we're going to find out. And as I said, you will need patience as we deal with this, but we'll also need to be persistent and keep asking the questions and putting the pressure on both on the banks, the SBA, and the federal government to move the money over to those that need it. So with that, Andrea, what questions do you have?
Yes, I have a few questions that have come in. So one of them is, I know in the last few days they've also added additional information on additional nonprofits and other organizations that could now in fact qualify. So for an example, they added on 501c6s that perhaps was clarified initially. There's been some commentary about religious institutions So I don't know if you could share if you thought that they would continue to add some of these exemptions or necessary qualifications that are now expanded.
Yeah, I was having a little trouble hearing you, but let me just say, I think that nonprofits are part of the smaller business community in that sense, that they can apply for this program. The only nonprofit I saw that is not able to apply for the program are people that are in a 501c4, which is an advocacy organization. Within the legislation, there was caution not to put money in the hands of people that are currently advocating or lobbying for funds. So only those organizations got left out. And for us, TAG, which we are a 501c4, we don't qualify for the PPP program because of that reason. But the larger picture is that even for nonprofits, right, I think that you've got to work with your accountant and your bankers to see if there's an element of your nonprofit, because there are a lot of 501c4s that have a sister arm as a C3, and I think they would qualify versus some of the others. The other thing I think you all should know is that some of us have a private company, and our spouse might have a smaller company that it does a little bit of business, but not a lot. You may qualify for the EIDL program. You might even qualify for a payroll protection program. There's also extension of unemployment benefits that adds an extra $600 per week. And so you might have a spouse that's working with you in your own company, and you might decide it may be more advantageous for your spouse to go into unemployment roles while you're trying to run the company, so that you can get the unemployment benefit and additional revenue that keeps your household afloat. So I think a lot of this is also being very smart and trying to figure out how does it best affect your business and your family as you navigate through very large federal programs that are being rolled out very quickly, and the rules sometimes are being written, in the fly.
Right. Also curious, we look at 8 weeks and that carries us a bit, but beyond the 8 weeks, do you have any sense for additional policies that are being looked at as we can navigate?
So it's basically setting up to for the 8 weeks, and I would count the 8 weeks from when you receive the funds. I think there'll be additional guidance. There may be opportunity where you might get the money, let's say next week, but rather than starting your 8 weeks the following week, you may be able to start it the following month. But we haven't gotten that guidance yet. So be prepared to spend it as soon as you get it. If you furloughed employees, I would say give them a heads up that I've applied for this program, and I'm going to be hopefully calling you if I get approved. Do some of that work on the front end. And then strategically, sometimes you know that there's particular projects coming up, and that project won't start for an additional month. And so you might want to, once you receive the money, work with your bankers and work with your accountant, say, I don't want to start spending the funds from PPP up until this point. What's in the legislation is that it has to be spent by June. So you can't go beyond that period of time, but we've got those 8 weeks, and those 8 weeks have to be consecutive.
Thank you.
Any other questions?
Well, I think we've all heard about the potential next wave of potential funding, and that could be even infrastructure focused. So from TAG's perspective there, I think we'll all agree that we would certainly support that. But I think getting another $2 trillion bill, even though it's infrastructure through, is going to be challenging. But hopefully we can do something to get more funding for infrastructure.
Absolutely. And Jeff, I think that's why TAG's role is more important today than ever before. A lot of funding is going to come from the federal government, state government, local governments on public infrastructure, because if you're trying to create jobs and opportunity within the economy, and the public sector is going to put that money in, it's going to come from the feds to the state to the local jurisdictions, and we'll have to advocate for that as a community, well, not just in Austin, but at county and city level. And that's why it's important for us as TAG members to come together on a consistent basis and make transportation an important issue, public infrastructure an important issue for our elected officials.
Yeah, I agree. And one of the things that we're really focusing on at TAG is telling the stories of how our infrastructure is continuing to carry us through the current pandemic, whether it's the delivery of goods, medical supplies, movement of freight and things like that that continues to happen, and how we're continuing to do our construction, ongoing projects, and keep those jobs moving. So it's really the story of perseverance and, like you said, staying positive and persistent for all.
Well, good. Well, thank you both for everything that you do. These two guys are great, and there's not a week that someone in the senior leadership at TAG is not meeting someone with a TxDOT or flood control or toll authority or Metro. We're in constant communication with our agencies. We are here to partner with all the members and especially our mobility partners to make sure that you're engaged and you know what's going on. We may not be able to convene together in one room, but we're certainly going to find other ways to convene with you and make sure that you have the best information to make decisions about your business. So until next time, thank you so much.
Thank you.
Thank you.